if you compare the quarter-on-quarter of last year versus this quarter 4, there have been much lesser new launches in US. And since US accounts for 45% of our revenue, it would affect naturally. So that was one part. The second was that there has been a consolidation at the channel level. So there is more than expected price erosion. Okay. And that's across the industry. That's nothing to do with Lupin alone. Right. But it obviously affects us in that particular area. The third thing is that in Japan, every alternate year we have what they call yaka cut. It's the price cut. So what has happened is that we of course make an estimate of that yaka cut, and we try to find ways and means to deal with that, by improving on volumes of the existing product, launches, etc. But in this particular year, a major part of yaka cut devolved in the fourth quarter. So even if you see the growth of Japanese business, it was 15% for Kyowa in the first 3. It came down to 6 or 7% in the last quarter. Okay. So that's and the last reason I would say is the general currency impact in the emerging markets. As you know, yen and ZAR, has been depreciating like India, but Indian rupee has probably held better than many other emerging market currencies. So as a consequence, there has been impact on translation, which again, dampens the profit. So that's the main reason. But I don't see cause for concern at all, because when I say lesser launches in US, it is more because the FDA generally has been taking a longer time to approve. We launched, I think, almost 1/3 the product that we wanted to launch this year. So there would be catch-up also, available. Yeah.
Are you happy with the pace at which some of the product approvals have, in fact, rolled out as far as overseas jurisdictions is concerned? And do you think that is perhaps one of the reasons, lower than expected pace of product approvals, that could have contributed to weakness in this quarter?
Yeah, I mean, overall, as you would appreciate, if there is no launch in the US, a new launch, and to top it all, there is also price erosion, then it creates a big challenge, because price erosion is a feature of the market, but often we are able to deal with that by our cost management. We are able to reduce cost or do better negotiations. Therefore, the net impact is there, but minimal. But when it goes into the range of 12% erosion as against 5-6% normal, then obviously you can't do things to neutralize it that quickly. And the second thing is that some of that erosion also gets taken care of by the new launches, which if it doesn't happen, then this is going to create problems. So that's the main reason, I think. Yeah.
So you spoke about the currency challenge. What are some of the major geographies where you're facing currency headwinds, and what is your hedging strategy over there, sir?
So I don't think we really punt on currency as such. The fact is the yen has been weakening against the dollar. So is the rand, the South African rand. And when we consolidate our accounts, we obviously have the translation impact on our consolidated results. So to answer your question, there is nothing much that one can do as far as the translation loss is concerned. If at all, hedging policy probably can help the transactional losses and not the translation losses.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.